Will the election stop the market crash? Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of Heise Says US. Grab your stein of coffee, or cup of joe as you Americans like to call it, and let's have a look at this article from CNBC, which is, well, putting the argument out there that investors are hoping for a clear presidential and Senate election outcome to end the sell-off. So, is this the only chance we have of arresting the market crash? And do you think we're going to see the market shoot to the moon once again with Biden or with Trump? If we have a look here over at Trading Economics, we can see the 1 week chart I have. Look at the NASDAQ. Well, it's gone from 11,575 down to 1150, and it bottomed out at under 11,000. The S&P 500, well, it's just going straight down from over 3,450. Well, down right now at 3,291. Had a bit of a jump this morning. We have a look at the Dow Jones. Well, once again, it's a similar story. All of them are tanking. All of them are going down. You can see here in the red, just the percent change. And the Forex, if we look, the US dollar to the euro is down. Great Britain pound to the euro is down. The Aussie to the USD is up, or is down. So the US dollar is buying more Australian. So it's a bit of a mixed bag. But the market has really hit. We look at some of the commodities. Gold is at 1871. Silver is at 23.48. Brent is at 37.45. Remember when that was negative, everyone. So let's have a look at this article and see what's going to happen. Because, you know, I'll have a look at the election result, well, the election coverage. It's definitely going to be an interesting outcome. We've just had travel warnings for Australians, not that we can, suggesting that we avoid the United States because of, well, civil conflict and unrest. Sadly, this is the state of elections at the moment. The best hope for markets in the week ahead is there is a clear-cut winner in Tuesday's presidential election. The election looms large as the biggest wildcard risk for markets, and there is a real concern that no outcome could lead to a period of uncertainty and turbulence for markets and the economy. On the other hand, some strategists say a clear winner and quick concession by the other candidate could lead to a relief rally. There you go. Also, a worry is that Senate elections could be unresolved, which means it may not be known which party holds the majority. If there's no clear winner, it will be negative for risk assets. The market is really worried about not having clarity after the election. They're worried about it dragging out for weeks as the results are contested, said Ian Lingen, head of the U.S. rate strategy at BMO. The overall landscape is not a political one. It's that we're in a pandemic, and we don't want an uncertain election outcome that leaves the country concerned about leadership. I think that's why we're seeing incumbents just getting in. New Zealand, you saw it happen there, with the incumbent government returned with a majority. Here in my own state of Queensland, over in Australia, we had the election yesterday. The incumbent returned with an increased position. So it's just happening more and more. Stocks closed out October on a sour note, with the S&P 500 down 5.6% for the week, the worst performance since March, when the pandemic first shut down the economy. Strategists say the coronavirus is already worrying the market as major European countries go into partial lockdowns and the US faces record numbers of new cases. He says he does not expect the markets to react as much if it's only the fate of the Senate that is undermined or undetermined. Maybe that was a bit of a Freudian slip, eh? But that is still very important. And if it's not clear which party has a majority for days or even weeks, that would cast doubt on the ability of whichever candidate wins the presidency to pursue their policy agenda. So the Senate is the key for stimulus. The Senate is also key to how much money will be poured into the economy to help battle the impact of the virus. For instance, if former Vice President Joe Biden wins the White House, but Democrats do not reclaim the Senate, he will likely have to compromise on a smaller stimulus package and would not be able to implement tax increases. If President Trump is re-elected and faces a newly Democratic Senate alongside the Democratic House, he will likely face pushback on many issues, though they may agree on a large stimulus package. As of Friday, Biden was leading Trump in the polls by 7.8 percentage points in the Real Clear Politics average of major polls. Democrats also appear likely to take the Senate, but some races are very tight. Bank of America strategists note that the Senate races are close, with a few seats that could flip. 7 Republican seats are currently rated as toss-up, with 4 in battleground states, where they could be lost if there's a strong Democratic surge. There could also be a clear majority, but still uncertainty in terms of a final markup. The overall composition of the Senate is unlikely to be determined until sometime in January, due to election rules in Georgia, which stipulates the race goes to a runoff if no candidate garners 50% majority in the general election, and currently no candidate is projected to hit that threshold, the Bank of America strategist wrote. The strategist says the timing of the results is unclear due to early voting, but high volumes of mail-in ballots, which cannot be counted in some states until Election Day. A short delay in the election result should have a trivial impact on the economy, but a multi-week contested election could drag down H1 GDP by 0.5 to 1 percentage points, according to the BOA strategist. Once there is a winner, the focus turns to stimulus. So watch bond yields. That could mean bond yields will continue their move higher in the coming weeks. Yields have been rising on the idea that there will be some kind of stimulus after the election, and it will mean more US debt and higher interest rates. We expect rates to shift higher by 5 to 25 basis points after the election outcome is known, due to expectations for fiscal stimulus and improved growth prospects, the BOA strategist wrote. The 10-year Treasury yield was at 0.86% Friday. However, if the election outcome is not known for a while, the strategist said a contested outcome could push the 10-year yield materially lower. If there is a contested election, the strategists expect stocks to trade lower, but it would be a buying opportunity since the market typically recovers from headline-related losses within 6 months. We expect a clear outcome to be neutral to positive for the market in the near term, except under a Biden win with a split Congress, which could potentially lead to continued gridlock in fiscal stimulus talks, the strategist added. Besides the election, there is also a Fed meeting expected to end Thursday with no new announcements, though it is likely the Fed will emphasize it will keep policy easy for a long time as the economy heals. The October employment report is expected on Friday and is expected to show continued job gains after September's 661,000 non-farm payrolls. Jonathan Golub, chief U.S. equity strategist at Credit Suisse, does not expect the market to react much if the election outcome is as expected, with Biden winning the Democrats taking the Senate. The most likely outcome is already discounted by the market. The best assumption is, if you don't have a big surprise, the market should do nothing. Golub said, adding, the most volatile week could be the one just ending. This week is the one with the turmoil, and I don't think the next week is the one where the market's going to go crazy. He said investors may be too worried about the election being unresolved, and the real issue disturbing the market this past week is the growing spread of the virus. There's no rule we need to declare a victor, said Golub. We have 4 or 5 weeks. The market may not love the near-term indecision, but the system is set up to allow for it. And as long as things don't go off the rails, and they really shouldn't, this concern about a contested election is probably overblown as an investor issue. Golub said there's a greater chance that the winner of the presidency is known before the Senate. The chances are that we'll at least know directionally where the power sits, but that could take a little longer and the market may be a little uncomfortable with that, he said. So earnings reports. Dozens of companies report earnings in the week ahead, and Golub said corporate profits are a bright spot for the market. The third quarter results so far show earnings down about 10% compared to earlier forecasts of more than 20%, according to Refinitiv. The reality is the economy is robust. 55% of the market cap of the S&P 500 has higher earnings in 2020 than in 2019. More than half the market is acting like there's no recession, no downturn, he said. Golub said both Trump and Biden would push for fiscal stimulus, but while the market is clear on where Trump stands, it does not know that much about Biden. If he were to win, it is going to take some time to get clarity on which of his policy initiatives are going to happen. I don't believe he's going to implement the tax increases he's talking about right away. I think the economy is too fragile. So there we have it. Monday, you've got the manufacturing PMI, the ISM manufacturing and construction spending. Tuesday is election day. And we've got a few other economic forecasts coming out. Now, I'll probably try and do a stream on Tuesday for the election coverage. We'll have to see how it goes. It's a bit challenging with time frames, but this really is an election that everyone has got their eyes on. What do you think about the take here that the market has already priced in some uncertainty or a Biden win? And do you think if Trump gets in, it'll rebound? Let me know your thoughts and opinions in the comments down below. Have you put a bet on the market? Where do you think it's heading? And who do you think is going to win the election? Take care, everyone. Have a great day. Please like, share, and subscribe to the channel. If you're a fan and want to support us, there are a few ways you can. Simply interacting with the channel, helping share the content, helps the channel grow. We're still a very small channel here at Heise Says US, so I'm trying to grow it. Any help is appreciated. If you want to support us financially, you can join the channel on YouTube or Patreon. Use our affiliate links you can find down below. Buy a merch from Heise Says or Teespring, or support us via PayPal or Gold Pass from the Perth Mint. Take care, everyone. Have a great day. I'll see you next time.